Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. For those of you who are new to the channel, this is where we talk about all things market profile. Now, for those of you who've been watching my videos for a while, then this is just another video. So if you're new to market profile, I think it's got to be now maybe 95% of all institutional traders use market profile. It is embedded into every institutional platform you can think of, whether that's CQG or Sierra charts, which is pretty much still retail in my opinion, but it has so much functionality that you might as well consider it institutional based on what you can do with it. So I actually like it when I use it, so I think it's pretty cool for a platform, at least for what it costs as well. Obviously CQG is a little bit more upmarket. If you're a fancy professional, well, that's your go-to. And obviously guys who deal with stocks and stuff, they might do things like TT and so on. But reality is that every professional platform carries market profile, right? And for anyone who's actually been in the institutional space or has traded futures in the institutional space, you're probably familiar with market profile. For guys who've been on the trading floors, so some of the older folks will be familiar with market profile. Now, of course, not every trader uses market profile, but I like to think as we've progressed a lot to screens, more and more professional traders would want to use market profile. And that goes for guys who, some of the older folks who were traders in the pits, for example, I'm sure a lot of them, having lost the edge on the trading floor, will be looking at market profile as well. So if you are not familiar or you don't know anything about it, well, this is the right channel, because all we talk about here is market profile. So you can go back and see a couple of the videos I've done. Some of it has been around obviously picking out positions, or at least giving people an idea of the kind of positions that we look at. Some of them are actual trades and then we talk you through them. So there's a lot of content here that should help new traders start on the right path, and should help older and experienced traders maybe develop into up their game, or develop into new types of ideas and strategies that are going to give them a better edge in what they currently do. So today I'm going to talk primarily about market profile. I'm also going to talk about some of the assets we're looking at and why this is so important for you to be paying attention to. I've been in the business for 15 years plus now, and one of the things that I've seen through my time is that so many people are pigeonholed into these ideas around trading and investment that really and truly they just don't hold any water. There's so much stuff out there, and if you are started down a specific rabbit hole and wondering why you are not succeeding, then it's probably because you are not looking at the right tools, you don't have the right technology, and certainly you do not understand the market mechanics, right? There's a reason I use market profile and have done for a large portion of my career. It's not because I'm a super fanboy of Peter Stuyvesant or, you know, Jim Darton or, you know, Stephen Hawkins, all the people who are involved with market profile as a project to get it, you know, back then into the Chicago Board of Trade. It's because of what it does for me, the edge it gives me, and also its proven ability, regardless of market changes or the market you're looking at, to be able to give you a graphic representation of the order flow, which is all I'm interested in. And there is no other tool, I repeat, there is no other tool that gives you a graphic representation of the order flow. You could have a level 2 depth of market, you could read the time and sales, all of stuff that I've done and I continue to do, but nothing gives you an at the glance graphic representation of what the market is about to do next, or other than market profile. So for me as a trader, that becomes my go-to. So today we're going to look at some assets, and you might start to see why market profile is my go-to. Right, so starting with cable, we had a conversation about this, i.e. we've traded bids, and you can see that responsive activity. Again, you know, we were long into value high, and then we retested bids and we're back long in a value high. Now, we did say that this will be a significant support level. You know, really shorts will be under the 126 handle, and I have a Discord server where I put a lot of this stuff up there so everyone can see, totally free information. So you just click on the link below and access the Discord server. You get a ton of info. It should really help you in your journey. Again, we are looking at cable now. I've been incredibly bullish. We're now trading back into those initiating sellers. I think they're late shorts. I think the responsive buyers here have a much better chance. So I'll be looking potentially for a dink back up through value. We know there's some strong offers here sitting at 128.40s. So really and truly value high becomes that key resistance. I really don't think we can track back into offers into 130. But again, we should expect some upside as we come into the end of the week. So I think that's a pretty reasonable position to take. One of the things that we also looked at is the fact that we're trading a squeeze level this year, and obviously in combination with that, we're definitely seeing a degree of divergence there, and as a consequence, trading out of squeeze levels is always something you want to pay attention to, because when traders are too short and we don't get, and it's not coinciding with the amount of money flow, then we expect that they're going to get squeezed. And we did say that a couple of weeks ago, and here we are. Obviously with the profile, one of the advantages you have is that you can look at a weekly profile but also see an intraday execution opportunity, because the profile is a way of segmenting the market, so you can see basically the entire market without having to change time frames, right? So without having to do this massive multi-time frame analysis. So very quickly I can split my profile, and then I can see the rotations, which are 4-hourly rotations. So if you are a swing trader or intraday trader, you can actually trade this as if it were a position, and what you look at as if it were a position trade, I should say. And if you were looking to catch where the volatility is going to expand, then you can actually do that. Because again, if you think about the move just last week as we traded in the bids, if you were a buyer, which we were, and we spoke about this and it's available on Discord server, if you were a buyer into bids, then the volatility was about 100 ticks. I mean, we did in the end about 150, and that was E period for the week. So that was pretty much you know, roughly towards the start of the week, and within the week it was 150 ticks. So despite the volatility that we saw within this week, I mean, as of within last week, sorry, as of this week, we are already trading back to the weekly highs. So again, it helps you ignore the noise, right, which is what a lot of traders struggle with, and most importantly, you get really good trade location. So anyway, that's the story with cable. So we're still relatively bullish on this one. Again, if we go to gold, we spoke about this. With this one, we did a emerging profiles, which is another cool trick that professional traders tend to do, is you tend to merge the profile. So this gives you a very condensed view of so in other words, it's very similar to volume profile. So traders who are all about volume profile would ultimately understand what I'm talking about, right? So it's that composite volume, but however, we're taking individual profiles and merging them to get a composite view of what's going on. So as you can see, gold has been short for a while, and naturally we will expect some kind of a rebound. But again, one of the things that we were able to see with our composite was that if we broke a key level, which was marked out here, then you can expect that the downside intensifies. I mean, again, I think we're sort of in a bearish development. And the other thing we tend to look at is position data. I won't get into that now, but again, reportable positions always give you a very good idea in terms of who's driving this market. Is it large institutions? Is it banks? Is it small speculators, for example? And when we say small speculators, we're really talking about you know, small enough speculating positions that they need to be reported. So Again, it's just basically how the big money is driving this market, who's taking the other side of those trades, and when are they likely to get squeezed out. So there's a lot more, I like to think, to positioning and trading, especially if you are a swing trader, which most people gravitate to. If you're an intraday trader, then that doesn't matter much, and it's a completely different way of looking at the market. Crude oil, again, we did talk about this, and Lord, people were paying attention. We did speak about the 85 level, which was for me where it was all going to come apart, and that's because primarily we had offer stacks, right? So if we go back to the profile, we can see we had a huge offer stack, and for me that's usually where the market looks to turn around. So we tend to want to monitor those. Obviously we're trading against bids now. Take out those bids, then we're going to cascade. There's an inefficiency down here, so I would think that we get a big drop in crude oil, maybe back into bids. So let's not write off the later bids. We could bounce off the sort of 75.86, 75.16 type handle. If we come out of that again, then we might get a little bit of a dink to the upside. But I think for now we're going to see a more or less downward trend. One of the interesting things we did see though last week is that we did bounce off bids. So again, this would have been a great short-term trade. Remember, these are weekly profiles, so again, if you'd picked this up on the bounce into sort of 78.85 or anywhere within that window, then you would have had a nice little dink up towards sort of mid to late in the week. And obviously now we're trading this week, crude oil is heading back down, so it just goes to show that the offer stack here is definitely holding, and if we do break lower, then it means that anyone who is buying here, who's got stops under here, we're going to start seeing them squeezed. And when we look at where we are trading with crude oil, it is getting closer to what we think is a squeeze level for this year, and judging from the money flow, I think that we need to really be back down here if we're going to start thinking about this as a viable buying option. You can also track this profile versus your money flow, so you can actually see at what point the money flow was actually really strong, where that became a decent support level. So sometimes having this sort of informational insight is somewhat useful. I'm not a huge fan of indicators, I don't really use them, but the money flow is kind of crucial because it really just gives you an at the glance point where this market is likely to squeeze, and then you can use your profile to do the rest. So it's not really about trading off those levels, it's more being able to use your profile to sort of figure that out. The S&P 500, this was an interesting one. Lord, did we not speak about this, trading into bids. Once again, we do have an inefficiency, so I want to bear that in mind. So I don't think that this is going to be the bounce that takes us high. Remember, we are capped, in my opinion. The upside is sitting about sort of 4.475, 4.509. I think this is a good level if we're thinking about sales. Again, you can see we're pushing up, money flows chucking lower. Again, once we start hitting those squeeze levels, then we know that this market is positioned to do a pretty big bounce. Again, this is the S&P 500 futures, so we don't tend to leave a lot of inefficiencies, but there's definitely some gaps in value, and we always get these filled at some point, so I wouldn't get too excited. I think it really gets interesting above 4.509, but for now I think the offers are pretty strong at that point, so we need to really see how the market reacts to that level. For now, it looks like a value trade, in my opinion. You know, we're probably going to go up a little bit this week, and then we're going to start to sell off again. So again, I just don't see, this is mainly a profit take, this is a reactionary move. I can't really see the traders building into these positions. This was historical bids, so we've triggered a bit more to the upside, but again, we've got a very elongated value area. It is almost inconceivable to think that we're going to be able to take this all this week. So in my opinion, I think that we're going to probably hold short at some point, so don't get too excited. Dollar yen, again, we're incredibly bullish about this. I think the dollar's got some more legs on the yen, so we already know that. We've spoken about that several times, so again, I'm not too concerned about what I'm seeing here. I do think that whilst we might get little dips, but this is a buy the dip scenario, I think we got some really strong moves coming in the end. We're technically trading a bit of a squeeze level, but as you can see, the money flow eased out quite a bit and the price didn't ease out. So yeah, we've seen some diverging here. Dollar CAD, we're trading that aggressive level now, so I did expect to sell off here. So we tested it last week, tested it again. I do think we got off a stack, so we should start to pull back, but we're really tight against bids. But again, with all this runway, I won't be surprised to see the dollar collapse against Canadian. So I think we're going to see this reflected in that dollar ease up But if we think about where we are, you know, long term, I think there's some movement against the yen at the very least. Bitcoin's an interesting one. Again, we tracked those bids into 25. We've been talking about this for a while, so we did get a bit tight here. It was almost like we were going to pop up for a while, but you can see that those 30k offers, yeah, it wasn't easy. So again, no surprise to see us take out the K period low, and that for me was a big dink into 25. So it was a great short, but I'll be covering if I was down. You can see here we're trading a major squeeze level against the massive divergence. Even if we test a little lower or test back into the 25k bids, I think that we're going to go up from here. So again, quite bullish on Bitcoin. Sterling yen, very similar story to dollar yen. You know, very high chance here that, you know, we've been saying this anyway for weeks, so you can just go back and see some of the other videos that we're going to keep pushing this. We are at a major squeeze level. I mean, we haven't been up here since 2016. I don't think we are going to push any more money flow, so we might get some spikes, but then in reality we're going to have to start to ease out if we're going to see more upside. So again, expect some weakness coming in some of these assets. I think we're a little bit overcooked, but again, the upside for sterling yen is huge. Again, some of the outliers like Aussie CAD, for example, these crosses on currency, you can see us building at the bids here. So if we start to crack the upside, then we're going to get some temporary upside flow. And again, if you look at where we are below major squeeze levels, and we are now trading what is the lowest point for the year. So really interesting, guys. So again, just to sort of backtrack, you know, this is why I pay attention to market profile. This is why I use it, because again, I've done a complete pass through most of the currencies, most of the futures that I'm interested in, right? Again, the S&P for me is a good mirror for my equity positions. So again, if you can, it's just pop this out here. So again, if you can see that I am short puts on Micron, and if we're looking at the pre-market right now, it's already gone, right? So again, I was short calls, so I have a nice average. I'm thinking about $1.86 on short puts, sorry. I'm about $1.86 on my puts. You know, swinging a few decent contracts here. So again, I'm expecting this to sort of, you know, head aggressively lower. So again, I like to sell premium. It's one of my core things that I do here. So for guys who don't know anything about that, you can check it out on my Discord server. It's a way that I kind of guarantee myself income on a steady basis as I manage my portfolios and deal with my CFD trading. Obviously, leverage trading has a significant amount of risk, and sometimes you're not always going to make money. You're going to lose positions. You're going to have to handle drawdown. So a good way to offset that is to be a premium seller. So I do sell a lot of premium. Granted, it does require you to have some capital to do this. It's not always, depending on the broker you're with. You know, of course, as you can see, I use Interactive Brokers, but again, you know, there are a lot of great firms out there that are capable of providing you liquidity for options. And obviously, again, like I said, I rarely buy options. I am largely a put seller, and to be honest, I rarely do spread trades as well, because I'm generally a put seller. I rarely sell calls. So I don't often find the need to cover the trade, for example, because again, with puts, I can just get assigned if I want. And again, I only deal in solid stocks, things I want to own. So again, it's not a big deal. To be honest, I've never been assigned, like, ever. And really and truly, you know, for those of you who've been in my Discord server, you can see I do pretty well from selling these puts. But again, I'm looking for this to drop way back to the lows. So, you know, some good volatility based on the pre-market open. I might even get that this week, in which, or even get that today, I should say, and in which case I'll cover these puts. So they've pretty much lost about 50% of their value. So again, a reason why you don't want to be buying put options or buying call options. You know, call options you could, but you're dealing against theta burn as you are with puts. So I mean, puts at the theta burn, it just feels more aggressive. So because they are puts and the market has this positive drift, this bias, so, you know, upside bias. So there you go. But anyway, I like to sell the puts. So you can see I've got a nice average here, and you know, the S&P is a good way to kind of decide whether that's something I want to do at a given you know, point in time. But again, it's just another way to capitalize on the market. And I always say, as a trader, you need to learn to play at different tables. You need to have a holistic understanding of the market. I'm not the only one who believes this. If you talk to a lot of professionals in the space, they will tell you this idea of maybe just trading futures or just trading stocks, or, you know, this is not a way to go forward. You need to be asset class agnostic, which means that you need to be able to see opportunities across the board. I think some of the biggest traders have highlighted that. Talking to Jason Shapiro, who's a famous market wizard, he was a big believer. We had a conversation sort of one-on-one around this, and it was a really interesting conversation about the ability to play at different tables. If you saw Tom Sosnoff's, who's like one of the legends in options market, or in the options business, really good options guy. Obviously, owner of Tasty, for those of you who don't know, owner of Tasty Trades and so on. He one of the talks he did, I think it was, I can't remember what conference it was, and one of the talks he says was that, look, you need to be asset class agnostic, right? You need to be able to look at the market holistically, so you can see where your opportunities because again, it's all about cost efficiency, right? Certain trades you can do them, but again, if it's not cost efficient, you're maybe not lose the entire trade, but you might end up paying too much to make a trade that you could have made cost efficiently elsewhere. And I suppose it's about that capital efficiency as well, right? So again, you don't want to tie up maybe too much capital to do certain things. Like here, I'm an option seller, I need to tie up capital. If there's a more efficient way for me to make a same trade, then I will try and find that. So again, it's also being aware of how much capital you're applying to do a specific idea, and is there a cheaper way to do it and get the same result or outcome, and this is kind of what professional traders often sit and think about. Anyway, guys, I hope you've enjoyed the video. I think it was sort of somewhat handy that we touched on some of these things, but once again, guys, to my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?